All right. I think everything worked out. I've been trying to go live, Danny, a couple times on Facebook from Zoom in the last couple of weeks, and I wasn't able to. I had to
Okay.
manually do it. But if you guys are watching this on the Real Closers Facebook group, today we have a nice topic. And why is this important? We're going to talk about taxes with Danny Franco. And even though our tax season ended, today and a few months ago and the very beginning of the year is when you're supposed to get ready for the end of year taxes. And today we have a few topics that we're going to talk about. But before we jump into that, just a quick reminder, we do these meetings and these trainings every Thursday at 12 p.m. And the goal is to provide as much value as we can to continue to help you push your business. And today's topic, of course, is taxes. Um, Danny, do you want to give us a quick introduction as to who you are and what your business model looks like right now?
Sure.
Yeah, why don't you do that?
Um, I first got licensed in taxes, my tax preparation certificate back in 2009 after the real estate market crashed. Originally, I was a realtor full time, but that got a little hectic and crazy. I don't know if any of you have experienced that time frame. Um, the banks were closing down, shutting down, escrows were disappearing. So your income was just like losing your job overnight. So I had to learn the hard way. And I was looking around to see what I could still do. And one of the things that we picked up was doing income taxes as my father used to do. My father has been doing them since the 90s. So I'm like, you know what? Let me try this out. I got to eat. I got to make sure I pay my cell phone bill and I can get some tacos and pay my bills. So it was a blessing. It was a blessing in disguise. So it gave me an opportunity to help people as taxes are intricate, very important part of people's lives, the people's adult lives, because there's no way around it. We all have to face it. And it's mandatory. If you're working, you gotta file. So that was 2009. Been doing taxes since then. Um, I had an office for a few years and then we sold it. So I'm on my own now. Me and my team, we're in Diamond Bar. And we don't, a lot of offices technically they shut down around April 15th, May 1st. The big boys usually shut down. Liberty Taxes, H&R Block, Hewitt Jackson. The big boys usually shut down by the summer, by May. So that gives the little people, the little offices, the mom and pop shops, the opportunity to stay open and attract clients that can't find their tax person because their offices are closed. So it was just an opportunity to continue helping people. And all year round, we're open all year. We don't close. We're open all year, 6 days a week. We usually don't work Sundays. April 15th is usually the craziest day. We usually work till about 2 in the morning. It's insane, but a lot of people wait till the last minute. It's insane, but it's necessary.
And I think that's the whole point of this training today, or I guess interview. You don't have to wait, like and you do not
Right.
want to wait because
No,
there's a
yeah.
lot of things that happen.
It's unnecessary. The stress is very it's people cannot handle that kind of stress, and you don't have to wait. Just get organized. So we'll be talking about that today.
All right, great, great.
Yeah.
So before we get started, a couple things. If you have comments, if you have questions, put them in the chat. Uh, Danny will be able to answer all questions. However, we always put a huge disclaimer when we talk about legal aspects of anything, taxes in particular. You guys always see those posts, people asking tax questions on Facebook groups, and there's always that one agent. We're not lawyers, we're not tax people. You have to ask your legal counsel. We're going to do the same thing here today. So, huge disclaimer, guys. You do have to talk to legal counsel. You do have to talk to your tax professional.
Absolutely.
Every state, county has different laws, different
Yep.
things. Um, if
Everybody's taxes are different. Some people are
exactly.
married, divorced, some people are widowed, they lost their husband or wife. So everybody's personal taxes are very different.
And if you do not have a tax professional, of course, Danny does work. I think you only work California.
I could do it. I could do any state, any state. I have clients in Hawaii, New York, Arizona, Texas. I have clients all over the place. Yeah.
All right, cool. So if you guys want to reach out to Danny, post a comment. He'll
Mhm.
probably tag you guys back. Or Danny, why don't you just give your number already? I know a few people probably gonna jump in and then they're gonna jump out. You know, it's busy, busy,
Sure.
busy time, right?
I'll put it in the chat, but it's 626-688-8734. That's my direct line. I'll put my email, um, all my information. We're in Diamond Bar. I'll put my information in the chat.
All right, awesome.
Mhm.
All right, so we do have a few topics that we picked out that we want to talk about today. However, if you guys want something different, if you guys have more questions, drop them in the comments in the group. If you guys watch this on the replay, you can always put the comments back later. We'll get back to it and answer them. Or like, Danny just gave you his direct number. You go ahead, text them, right?
Yep.
He's always open to getting new clients.
Absolutely.
So I guess the biggest question right now would be why is today, right? We just ended tax season April 15th. Why is today a good time? Like, why is it now a good time to start thinking about taxes?
Good question, Robert. The reason is there's a few reasons. A lot of people missed the deadline. They still haven't filed. There's thousands of people that have not even filed older taxes, 2021, 2022, 2023. And actually tomorrow, May 17th, there's a deadline for the old taxes for the stimulus. So there's stimulus money that a lot of people got and received. The stimulus credit, they called it, the fancy one was economic impact payment. There's three of them. The first one was 1,200. The second one was 600. The last one was 1,400. Those are still available for people that didn't get them, but it's not advertised and it's not publicized. The news hasn't been putting it out, but tomorrow is the deadline because you have to file 2020 and 2021 to validate to activate those. And if they don't get them postmarked by tomorrow's date, they're gonna be expired. So I'm still having clients all day long, yesterday and today, still finally getting back to me to file the old taxes. Some
That's
people were,
basically free money, right?
oh yeah, absolutely, absolutely. That the COVID, it was during COVID where the economy took a hit. So the government was giving out a stimulus for people to stay on their feet, and it helped a lot. It helped a lot of people out. So that's another thing. So technically, a lot of people missed the original April 15th filing, but they still have a technically 3 years to file past taxes. If you have like a 2015, you can still file it, but they won't honor it. Like if you have kids, they won't honor it. They give you a window of 3 years, 36 months to activate your credits from work, the earned income tax credit from work, your kids, your child tax credit. Beyond the 36 months, they don't honor it. So right now is the time to, instead of hiding, just take some time, get organized, get all your records, get your 1099s, get your commissions, start looking at everything, your expenses, because the next deadline is October 15th. If people didn't, and I'm sure a lot of people did extensions, the extension was due by April 15th. They gave you a little grace period like April 24th. You can e-file it. That already passed, but if you have an extension, you have up until October 15th to file. Beyond that, the IRS adds penalties and interest for filing late.
Yeah,
And
I think even though you get an extension, you're still supposed to make sure that like if you owe money, like you still have to pay by
yeah,
the deadline, right? That's what a lot of
exactly.
people don't get.
You have an estimated tax bill or estimated income tax. You can still pay that, get it out of the way, but then submit your documents by October 15th. Yeah.
Okay.
And I think this year depending what day it stands. Let me just check the calendar. I totally forgot. October. Yeah, it's October 15th. Because if it's a Saturday, they roll it over to the Monday.
Okay.
October 15th. There's still time. I get a lot of clients, Robert, that haven't filed for years, 18, 19, 20, 21, 20. So I tell them, what do you're only, the longer you wait, the more you pay. So it's just knock it out already, you know?
And I think one of the questions that pops up all the time is, especially around, real estate, is that sometimes some agents are not really producing, right? So they're not making any income.
Mhm.
However, and sometimes because of that, they're like, oh, I don't have to do taxes because I didn't make any money.
True,
Um,
true. A lot of people think they don't have to file, but whether you're doing Uber, Lyft, W-2, working at a bank, if you're doing part-time, that's fine. You still have to file. But technically, the IRS wants anybody making $600 or above. If you get anything reported, you need to report that.
all right, so
Just
that's a good for agents. If you're watching this, you have not filed your taxes, you just heard about the credits. If you need help, either contact your tax professional or
Mhm.
reach out to Danny
Sure.
to get started on that. So now, for those who are caught up with their taxes, right, and they've done everything they're supposed to do, and getting ready through next year, like what should they be keeping track of as far as expenses and things that they're going to be able to write off? Because real estate agents are 1099, right? So they get paid basically
Commission.
the full commission.
Mhm.
But sometimes newer agents don't understand the concept of W-2 versus 1099.
Right.
And then at the end of the year, they get hit with a huge, uh,
Self-employment tax. Yeah.
exactly. So can you explain a little bit about that and what should agents be keeping track of and how, what tools can we use to make sure that by the end of the year, we understand exactly where, that bill is going to come from?
Good question, Robert. I'll provide the list. If anybody asks for it, I'll provide it. We made a list of expenses. Um, let me just go over the income. A lot of people forget they lose 1099s. They forget, oh shoot, I did a little bit of work for Uber, for Lyft, for Amazon. Not only remember your expenses, but you got to remember your income because there's been times where people file their taxes thinking, oh, that's it, Danny, here's this, here's that. And then the IRS processes it. They're like, no, you're missing stuff. Look, and everything changes. Like you were working here, you did this, you did that, you got a settlement, you won money at a casino. That's another thing, bro, that people forget. When you win money at the casino, they usually give you a paper and people throw it away. But that pops up. The IRS has record of that. Like you won, a jackpot, 600, 800, $1,200. People forget about that. And they're like, where did that come from? Like, or unemployment too. They're 1099G unemployment. People forget to report that. And there's a lot of love letters and surprises that the IRS, mails you 3 months later. And then they started getting mad at me, like, Danny, you made a mistake on my taxes. Look, the IRS says you didn't do them right. And I said, no, you never provided those forms to me. They know about them. I didn't know about them. You had them. You didn't give them to me. Oh, my bad, my bad. So not only to be conscious of expenses, but also all your income. But going back to expenses, Robert, a lot of agents forget everything: bank fees, postage, marketing, keep a record. I personally, some people do like ledgers, old school receipts, ledgers, a spreadsheet, Excel. You can do all that. That's not a problem. But in this day and age, a lot of people want to do technology. So there's a lot of apps. One of the most popular apps right now is Intuit. QuickBooks Self-Employment. It's like $10 a month. It's a really cool app. It not only tracks your mileage for work, like as you're an agent or a lender, you're driving to meetings and clients. It tracks your mileage, and it connects to your bank account. So whenever you're spending money, gasoline, or you Office Depot supplies, it asks you how to categorize it. Is this business or personal? Business or personal? So that's another mini free bookkeeper, a $10 a month bookkeeper, very low cost, very low overhead. It's an app you can get on Android or Apple. It's called self-employment QuickBooks by Intuit, powerful software. It's been around for a few years. That tracks all your expenses. Marketing, advertising, open house signs, for sale signs, listing signs, post, digital marketing, Google, all your expenses, business cards, gifts for clients, your meals, your transportation, your mileage. Another thing that I remind realtors to keep a track of, and they always forget, is how much they're paying people, like TCs. Sometimes they don't put that. Like, wait, if you did 12 transactions, how much did you pay your TCs? So that's another thing. And I have a list, a piece of paper, a list, your TCs, your processors, your junior staff, your subcontractors, your designers, when you're paying people to design, like, what is it, Fiverr?
Yep.
Everything.
Upwork.
People need to keep track of that because it's a lot of money. Because like you said earlier, if you generated 80,000 and you report a full 80,000, you're gonna get taxed on 80,000 versus 80,000 minus your write-offs, minus your broker fees, office fees, rent, your office rent, marketing, advertising, your board, MLS fees, your super key, super locks, everything you're buying, your gear, Century 21, Remax, whatever, EXP, all your gear, your branding, that's all an expense that you can write off on. And people forget. It's like, I don't know. That's why I start advising clients, look, start using a credit card, dedicate one credit card to all your business expenses. So at least if you're losing receipts and you're losing invoices, at least you have the credit card statement, because if you get audited, the IRS will ask for documentation. So if you have your credit card and it says, board, Downey Board of Realtors or Citrus Valley Board, San Gabriel Valley Board, $1,000 a year, whatever your fee, that's proof that you paid it. They want to know, they know what money you made because the brokers report that to the IRS. So they're not questioning how much you made. They're questioning where did you really spend it, So that's another recommendation. Get the software, Excel, spreadsheet, make a spreadsheet, make your expenses, keep a track either on a weekly basis or at least a monthly basis. Don't pay cash for stuff. Please don't pay cash because it's just not, you can't track it. You gotta have an invoice, receipts, and implement it into your software or Excel or the Intuit. But a lot of people forget all that. The E&O insurance, business cards, marketing, desk fees, office fees, broker fees, all of that stuff is tax deductible.
And one of the things that I do want to concentrate on, because I get this complaint from agents all the time, I don't have money for marketing, right? And you just talked about marketing is a write-off. Look, at the end of the day, you're gonna pay taxes regardless, right? I mean, there are people that claim, "Oh, I pay no taxes," because of course they're able to. There are ways, again, full disclaimer, talk to your tax professional, how that works. But more likely than not, you are gonna pay taxes. So when you complain about not having enough money for marketing yourself, running Facebook ads, running Google ads, running any sort of branding ads, either you spend that money in your business,
or you give it to Uncle Sam.
or you give it to me because I'm gonna probably use it, right, for as a global, what is it, like taxes are gonna pay for everything, right? I'm gonna be driving on the road to get fixed and all those things, right? Uncle Sam is going to collect the money that you claim you don't have for marketing. So this is a wake-up call, guys.
Yeah,
you're gonna pay that money back. Why not? This is how, and again, I think one of the things, the reasons why it's important to keep track of everything is because if you know more or less what your tax bill is going to be before the end of the year, you could use some of that money back into, again, marketing, running ads. You're gonna give it to the government in taxes regardless.
Yeah, you're always going to pay taxes. So like you said, Robert, it's very important. A lot of people preach this. I know Grant Cardone is one of the main ones that say, pay yourself first, because or else it's going to go to Uncle Sam. Like you said, a lot of agents do say that I don't have money for a video, I don't have money for marketing, but you're still spending money. You're still spending money at REP or parties or outreaches, networking events, concerts. People are still spending money, beer, alcohol, drugs, tattoos, high heels. You're gonna spend it. You might as well invest it into your business. Absolutely, Robert. You're right. Because Uncle Sam is just waiting. He's waiting for la mordida. He's waiting for the bite. Like,
Yeah.
okay, all right, you used to owe us 10, but now you owe us 2. Well, good job. You wrote a lot of stuff off, but we still want our little mordida.
Right. They're still gonna take some, right?
Yeah.
And like I said, I've heard of many people say that they don't, there are ways, but I guess talk to your tax professional
Mhm.
where you can minimize. But I mean, if you're gonna pay $10,000, $20,000 in taxes at the end of the year, think about that, right? If you close one transaction, you know more or less how much of that you're gonna pay towards your taxes.
Mhm.
If you're gonna close two, three, four, your tax bill is the amount of money that you're gonna pay in taxes is gonna increase depending on what you can write off. So write off on marketing,
Absolutely.
brand yourself.
Businesses, investments, you gotta keep it out of your pocket. Basically, you gotta keep it out of your pocket. Once it's in your pocket, they want it. So that's why these rich people, celebrities, they buy mansions, restaurants, businesses, cologne. They do a lot of businesses, enterprises, because if it goes to their name and in their pocket, it's taxable. So that's why they donate, foundations, fundraising, charities, cars, dealerships. You see all these famous people like what's that guy from the Denver Broncos? Man, he was a quarterback. What's his name? John
Uh,
John Elway.
oh yeah.
John Elway has a few dealerships like Chevy, Ford. So because that money has to flow away from you, not into your pockets, because that's when Uncle Sam wants the mordida. They want the little bite. And it's not fun. Nobody likes taxes. Everybody hates it. You just got to do it right. You got to do it right.
Yeah,
Um,
do it right and do it on time because the more you
mhm,
wait closer to the end of the year,
mhm.
you're losing your chance at using some of that money towards back into your
Exactly.
business.
And in this country, Robert, in America, every country has taxes, but in America, we have a progressive tax system where the more you make, the more you pay. So a mechanic making 40,000 a year is not going to pay the same as a police officer, a teacher, or another professional making 80, 90, 120,000. It's progressive. So the higher you make, the higher the rate is. It reaches the highest right now. I think it's 36%. So if you're making over 150,000, the tax rate is close to 36%. So that's not pretty. That's like 1/3. That's ugly. Like who wants to pay that? So that's why, and you have to have assets and tax shelters, IRAs, life insurances, investments, properties, apartments, businesses, college funds. You gotta put it away from your pocket, divert it. So
And that's probably one of the things that are gonna come up in some of the questions either later, during this presentation or later.
mhm,
And maybe we're gonna have, Danny come back
of course.
and possibly just talk about that one topic, right?
Mhm,
So where do you put your money? How do you set up because Danny also knows stuff about insurance, life
mhm,
insurance, right? There's a
mhm.
lot of life insurance policies
Yeah,
that you
permanent
can get in
life,
there. Yep.
IULs.
IULs, exactly.
Exactly. There's a lot of vehicles. Um, Mutual funds, IRAs. The thing with 401ks, when people are employed, they fluctuate. They do gain money, you're contributing, but they could also lose money. So something safer is usually the personal IRAs, investment retirement funds, life insurances that's, they have cash value. There's a lot of products out there, investment vehicles that people need to consider because the quinceañera or the condina, that's not ideal. That's not going to go anywhere. That's just going to go out the door, out the window. So um, you
Yeah,
got
and
to
just like
invest.
I think like the 401k for W2s, there's a 401 something or 201 or 207, I think, for self-employed people as well,
Yeah,
right?
there is.
Yep.
I don't know if it's a 403B or something. There's different ones. There's
Yeah.
different ones you can establish for yourself.
We should probably come back and talk about those because I think
Definitely.
it's important right now. Because I know,
Mhm.
like you talked about Roth IRA,
Annuities, yeah, annuities too.
and
There's a lot.
there's always what a maximum you can contribute to them, right? And you
There's
probably
different
don't want to
ones,
wait
yeah.
until the end of the year to figure that out. You probably want to start thinking about it right
I
now.
believe the IRS allows 25% maximum on an annuity.
Yeah,
You can't overfund it. So if you know you're gonna average about 200,000 a year, dedicate 25% of that to your annuity, which belongs to you. It's for your future. So that's a big tax write-off.
all right.
Absolutely. We can come back and talk about that. But we can talk about protection, Roberto. One of the ways to protect your livelihood and your business and your income is the LLC, the limited
Yeah,
liability company. It's very important to establish one to protect your business, protect your assets. I personally, many years ago, guys, I had a business. Um, I was a partner in an escrow company, escrow corporation. I was one of the partners. We got sued. The bond was $50,000, but because in my capacity, I signed as a guarantor without an LLC. I didn't protect myself. And a lawsuit, years later, a lawsuit came about it. We lost. And I got sued for about $128,000. So lesson learned. That's a six-figure lesson, guys. LLC, protect yourself. Protect yourself.
yeah,
Absolutely.
and that is one of the biggest questions a lot of agents have, right? Oh, it is an investment if you're not making money because you have to pay in California, you have to
800
pay $800. I believe the
$800 a
first
year
year though, it's
annual fee.
but then the first year is not you don't really pay for the very first year, right?
Not really. It rolls over. It
Yeah.
rolls over to the next fiscal year. Yeah.
Yeah.
Yeah. But
I don't
it's
know.
worth
For some
it.
reason I paid for mine. They messed me up, but I'm like, oh shoot, what do I do? I'll just pay it so I don't pay anything else.
Technically, depending when you file it, Roberto, depending on the calendar month, they franchise tax board California wants it 90 days later. So if you're gonna get an LLC and you want to save the $800, file it later in the year. But if you want to get going and protect yourself and you're already ramping up, file it ASAP. So
Are
yeah.
those things you deal with too, or you usually send people to set up LLCs outside?
No, I do that in-house. LLCs, S corps, I do that in-house.
And that's another topic that we probably should, get a full meeting on, like the difference between LLC and S corp. Now with the LLC stuff, again, a lot of agents are trying to figure out, should I start now? Should I not? Should I do it? So you do recommend it just because you protect yourself. It is a way to protect yourself from different things. And I mean, dealing with contracts, right? As a real estate agents, we
Mm-hmm.
could get in trouble. Um, so might as well just do it, right?
But
Invest.
yeah, I mean, technically, financially, if you're making about 50,000 plus, that's go for it, do it. But the protection is always no matter what dollar amount. For example, Robert, if a person has a bank account, savings account, a property, um, an inheritance, a savings, and they're not protected with an LLC and they're driving or their dog bites somebody, if you don't have these business protections, your business insurance, LLC, you're open game. You're not shield. Let me see if I can. You have to shield yourself. Like the LLC is a shield that protects Mr. Robert and Mr. Danny Franco, and lawsuits, and it doesn't penetrate as easily as Danny Franco. Oh, his dog, his Labrador bit my neighbor. Now I'm getting sued for freaking 150,000. Well, you have to have protection. As a real estate agent, and somebody sues you, let's say you get in a car accident or you bump somebody on a bicycle, an accident on a parking lot of Walmart or something, you can lose not only your car, you can lose your savings, your bank account funds, your
House.
checkings, your house. If you have an apartment, if you have a house, rental, duplex, that farmer's insurance, whatever, Allstate, they're gonna come for everything, guys. So that's why the LLC is so important. It's a shield to protect yourself, whether you're making 25,000, 50,000, 100,000. The value is in the protection, the liability protection. That's the value. I know it's $800 a year, but trust me, from a guy that had to, get sued for 6 figures, it's worth it, guys. It's worth
Yeah,
it.
definitely. I'd rather pay the $800 than
Any day,
120,000.
every day. Yeah, yeah.
All right,
You don't
cool.
want to be in court. I was in court, man, for like 6 months fighting that. It's
Wow.
stressful. Yeah, it's stressful, guys. A lawsuit is stressful.
And you still have to pay for fees, lawyer
Oh
fees,
yeah,
your
fees, filing fees,
time.
legal fees. You're losing time. You're losing sleep. It's very stressful. You can't sleep. You're having nightmares. It's crazy. It's
Oh
crazy.
man.
Yeah,
I think, I think we've touched on a lot of different little things here today. Some of them are major points probably agents
life
should start
changing,
considering.
life
Yeah,
changing,
life
guys.
changing. I mean, if you get sued, and you're only making 50, $100,000 a year and you're barely getting by. And I mean, 100,000 sounds like a lot of money, but when you start considering your expenses,
Hmm.
your rent, if you're renting, if you're buying, all
Yeah,
those things,
it's a
uh,
setback. It's a big setback.
it can definitely get you down, and
Mhm.
motivation too goes down, right? I mean, you have to deal with all those things.
Yeah, you feel
That
like
affect,
giving up. You feel like, man, what do I have? What do I do now? Like, you
yeah,
know,
what's the point? I mean, what's the
yeah,
point of making money if it's just gonna go away, right?
it's gonna go somewhere else, somewhere else. Yeah.
All right, awesome, man. So a few things that I got from this record keeping, right? Make sure that you start record keeping. LLC is important to protect yourself. Find tech tools to help
Yeah.
you keep track of what you're spending, and know ahead of time how much you're going to pay in taxes so that you can put that money back into your business.
Yeah, yeah. And a rule of thumb, Robert, for real estate agents, rule of thumb, make sure you're saving money on commissions. Out of your commission, save some money for taxes, save some money for marketing, save some money for your bills, save some money for church and your charity. But always save money for Uncle Sam, because you're gonna pay it. It's an average of anywhere from 15 to 25% on your commission is gonna go to Uncle Sam.
Yeah, and I think that's one of the things that you told me before that you wanted to also talk about, right? Because it's important to know again that you're going to end up paying that money anyways. So
Mm-hmm.
if you want to lower your tax bracket, if you want to lower your liability on taxes, you can still use some of that into your business,
Mm-hmm.
but you're still going to end up paying some. So
Yeah,
save the money,
records. Yeah,
right?
record
So, some
keeping.
agents are like, "Oh, my first commission, I'm going to blow it up," right? And then they're like, "Oh shoot, I shouldn't have spent that much money." So
Yep.
if you guys are watching this on the recording, if you still have questions about anything related to taxes, put it in the comments. Talk to Danny directly. Um, Danny, do you want to give us your phone number again and
Absolutely.
ways to reach you?
Yes, area code 626-688-8734. I'm in the San Gabriel Valley. We have appointments 6 days a week. We usually don't work Sundays, so we're Monday through Saturday, um, morning through evening, appointment only. And we work all year, not just tax season. We're working January 1st to December 31st if I'm still in town. But yeah, we're working even if I'm on vacation, I'm on the laptop working. So yeah, the email is trinityllc247@gmail.com. And we can, another important thing, Robert, actually, there's a lot of fraud. Unfortunately, there's a lot of tax fraud. People go to different places and do their taxes, and little do they know these tax places are doing crazy stuff. So another thing I want to offer people is a free checkup. I can take a look at your taxes, the last 5 years, just to make sure everything looks right. And unfortunately, Robert, about 35% of the time, there's something shady, something crazy. I'll give you some examples, guys, that people didn't even know that this was in their taxes. I've seen taxes that have a family and children, and then a daycare center write-off that they never even had. It shows a childcare provider that they've paid supposedly $8,000 to, that doesn't exist, and they never even knew who they are. So these places, these tax preparers do a lot of crazy. They're not supposed to, but they do a lot of crazy stuff to get you a good refund, so you can, you know, they want to tell you what you want to hear, but not what you have to hear. So they manipulate the numbers so you can stay happy. Oh, you got a refund, congratulations, come back next year. But when you look through the records, there's crazy stuff in there. I've seen somebody supposedly donated a $25,000 baseball card, collectible baseball card, to charity, and that guy was like, I don't, what is that? Like, I've never done that. And he got audited. The guy got audited. So
Oh,
be
wow.
careful. Be careful where you go, who you work with, because sometimes they're putting crazy things, even dependents that you don't even have. Like, they start putting people, nephews, nieces, you know, Sancha, they start putting people in there that are not even your dependent. They put 2 years ago, I was helping a nurse out. She's a nurse in the Inland Empire, Loma Linda, and she had a business and they put a loss, income loss, just so she can get a bigger refund. And what's worse, Robert, they took the refund. So they took part of the refund that she didn't know about. And when I took a look at it and I recalculated and said, hey, this is not right. This is way off. They took your money. They took half of your money. So that's another thing I want to offer to our friends and family here. We can take a look at your taxes for the last 5 years, just to see if there's if everything is straight up on it, and unfortunately it's about 35%. Something's either a mistake, an error, or something's missing, or something was added that shouldn't have been there. So,
And yeah, that's a huge issue, especially if the IRS finds out. They're not gonna just, oh, a little slap on your hands. Like,
oh
no, no,
no.
no, no, no. You owe us for the last 5 years. Come on,
Yep.
start paying up.
Yep.
Yeah.
Exactly.
All
Exactly.
right. Sounds good, man. I'll definitely probably push my taxes your way too, just in case. All right, Danny, I think you froze up a bit. Can you still hear me? Someone, is it me? Is it me?
No, he's
Oh,
frozen.
it's him. All right. All right. Well, anyways, guys, thank you so much for stopping by. I hope you got some value from today's meeting. We're definitely going to have to come back and dive deeper into things like the LLC, the S Corp, ways to set up the LLC. Of course, you have access directly to Danny now. He provided his phone number, his information. If you guys have questions, drop them in the comments. We'll put you in contact with Danny. Take care of your taxes, guys. And again, remember, you're going to pay taxes. Use some of that money to your benefit, to your, to things like marketing. Marketing is important right now. If you're saying you don't have money, but you just closed a transaction, Danny just mentioned 20-25% of that money is going to go into taxes. So that means you have about 20-25% to start using into your marketing, lower your tax liability, close another deal, and then continuously invest back into your business. All right, guys, thank you so much. We'll see you again next Thursday. If you have questions, drop them in the comments. You can always contact us directly at support@houstir.com or send us a message. All right, have a good one, and we'll see you next Thursday. Bye. Bye, Xiomara.
Bye bye.